Welcome back. Well, Minda Industries is the company that is in focus. This is as the board has approved acquisition of a magnetic speed and position sensor business from Sensata Technologies. We have Mr. N.K. Minda, the CMD of the company, joining in to discuss this. Mr. Minda, hi, thank you very much for taking the time out. If you could just give us a little more details about this particular acquisition. How exactly is it going to aid your revenues as well as your profit? What margins does it come with, and how much are you shelling out, and how?
Oh, thank you very much for calling. And then, this is something, the BS6, the regulation which is going to come next year in the auto segment, which is car segment, passenger vehicle, and two-wheeler another 2 years later. So the total market potential would be something around 1,400 crores, 500 crore in the passenger vehicle and 900 crore in two-wheelers. And going forward, we are looking around 30% revenue, and this is going to be mandatory as a regulation norm, as we all know. And as far as the margins are concerned, we are already in the sensor business in a big way. We are the leader in two-wheeler segment already, and it will enhance our, profitability and, of course, the margin level better than what we are on average today, around 12%.
By how much, Mr. Minda, sir? If it's going to be margin accretive, then how much should we expect?
No, today our average margin is 11.5, 12%. So it will be better than that. It will be better than that.
Okay, it's a small acquisition. I think the total size is around 32, 33 crores. So entirely funded by internal cash?
Yeah, all internal cash. It's something around 40 crores.
Okay.
In the first phase and second phase together.
Okay.
And all through internal cash.
Okay.
And the line we are shifting it from China. The China is right now they are producing in China, and this is going to be like cam, crank, and transmission sensors in that field.
Okay. Mr. Minda, how much of your revenue do you get from Indian auto companies, domestic production?
I would say our total revenue is 7,500 crore last year, and out of that 17% is export, and rest of them are all Indian.
Okay. Are you facing maybe any sort of slowdown in demand when it comes to supplies or any sort of contracts with your Indian domestic manufacturers? Because, we've been talking about a lot of inventory buildup that we've seen auto companies have in the past couple of months. Is that reflecting in terms of, say, orders and maybe demand slowdown for you?
Yeah, of course, the sales are, let's say, not only us, all the auto component Indian, depending on Indian, is around between 10 to 15% less, and thereby, because of the auto segment. But I expect to grow it, to take it further shape and come back to the normal position in the month of January.
So, but that means that for
things have already started moving.
Okay. So you're saying that this blip that we have noticed in the auto sector overall, that may be just a third quarter blip, and January onwards, fourth quarter onwards, it might normalize. But how big will the blip be? Third quarter, what should we be prepared for? Because second quarter, you're a blowout quarter, 40% revenue growth. So what's a realistic assumption now, given the reality of Q3 in mind?
So Q3, we are expecting around between 10 to 15% down, the segment, depending upon the segment to segment. And I think quarter 3 and the quarter 4, we are all hoping for the best.
So 10 to 15% down in what terms, sir? What will be down 10 to 15% in Q3?
I would say the volume, first of all, the vehicle volume, thereby the all auto component, depending upon the volume, particularly in the passenger vehicles. And thereby, all the auto components, we are all dependent upon automobile.
So what kind of capacity utilization do you have at your plants right now, as compared to, say, maybe in the first quarter or the second quarter?
Normally, we operate with between 85% capacity, because we always keep 10 to 15% as a reserve, for any fluctuation. But so now you can say, let's say by 10% less, around 75% in the third quarter.
Since in the entire Q3, capacity utilization is
in the entire Q3.
Okay, it's probably fallen by 10%. So you're probably going to find it difficult to replicate this 30% growth that you did for the whole fiscal of FY18?
No, I think to cover it in the third quarter loss might be difficult. If we are able to come back to the Q2 position in Q4, I think that will be a big success by itself.
But you're not confident about that visibility right now, or are you, for Q4?
Yeah, as I said, Q4, the signs have already started moving. So we are optimistic. And let's see, because this is a big question in the economists. Economists even cannot predict what will happen in the future.
We can only hope
But
for the best, I
it's a
think,
good
all of
guess.
us. Yes.
We can only hope for all of us.
True. Mr. Minda, quick last question then. Back to the acquisition. You've done this 40-odd crore rupee acquisition now. Is this a strategy we'll see repeat in 2019 also? Are you looking at more small strategic buys that fit your business? And also, if that is the case, how much cash do you have on the books right now to keep funding this inorganic route?
See, I would say, we are, first of all, we wanted to grow. We wanted to grow with the industry. We are far behind than China. So in the Indian industry and also in the international, so we have a big plans going forward, in the near future. For going forward, the organic and inorganic, both growths are required. So we continue to do that. As far as your question is, the cash is concerned, our debt, I would say, is right now around 0.5. And continue going forward, our policy is to keep the debt between 1:1, not more than that.
Okay. All right, Mr. Minda, we're going to leave it on that note. Thank you very much for joining in and giving us all of that perspective. So that's Minda Industries up around 0.8%. But the management did say that, yes, Q3 demand was probably slower than what they've seen before. We'll take a break now. But as we do that, here's some market opinion then. As we enter 2019, Atul Suri of Marathon Trends believes that emerging markets will outperform and India will benefit from this particular trend. Listen in.
I think that even if you start seeing mildly positive FII flows, I feel that our market can revive and it could be among the first few markets to get into lifetime highs. Fact is that our markets can surprise on the upside. So I'm looking at 11,000 as an immediate area right now. But I feel if 11,000 gets taken, we have a very good chance of a shot at that space. So I think Indian markets have done very well. And I feel that compared to others, we've actually held out very well. The way consumption stocks have been behaving in this correction is phenomenal. In fact, the sector or stocks that are very near lifetime highs, 3%, 5%, most of the stocks is actually the consumption basket. Stocks that fall less in falling markets and are the first to break out are leaders of the next bull market. And I know that consumption is expensive. People have a lot of angst about, it having already run up. But I don't think anyone has a sense what is fair valuation. I feel if there is growth, these stocks will continue to perform. And I think consumption, and I'm not just saying FMCG, I'm talking about a bigger basket in consumption, I think is going to be the big theme ahead. Second is financials and private banks. Again, a very spoken about trade, very people are this thing. But look at the way the stocks are performing. Where is the panic in that? They've all reversed and they're just a few percentage from lifetime highs. In the beaten down space, the index that I like is the capital goods index.
Okay.
Because if you look at the capital goods index, it's done nothing for 10 years. No. In fact, it's not even taken out the 2008 top.
Yes.
So you've had an index that has underperformed for 10 years, almost consolidated, and is now actually holding out. In this fall also, you'll find some of the larger capex stocks have held out very well. So I have a feeling that the big money, if you want to play in the beaten down space, is going to be the capital goods space. And that's where I think there are some very, very interesting charts.